Hi, this is PR Sundar. Welcome to pre-market report sponsored by taxbuddy.com, a leading tax filing portal in India. US markets fell more than 2%, and this is the worst fall in 2023. The reason, very simple, the rising interest rates. And the rising interest rates, the Fed minutes will be coming today. It's creating a kind of jitterness among the US traders. So when US markets fall more than 2%, so it's natural that Asian markets will also fall. And SGX Nifty is indicating nearly 100-point gap down. Our markets are already very weak and it has already fallen 3 days. And now these global cues are adding fuel to the fire. And 100-point gap down, that too on a Wednesday or Thursday, is a big thing. You may remember yesterday I told you to buy 17,750 PE and finance it by selling 18,000 CE as and when markets recover. So yesterday in the morning markets recovered and that trade has given positive cash flow. And today Nifty may not fall below 17,750, but it is going to open around there and it's going to linger on. So IT stocks definitely will be under pressure because as and when Nasdaq falls more than 2% in US markets, the IT stocks usually come under selling pressure. And anyway, so they have already started falling yesterday itself. And banking stocks, particularly PSU banks, now they are always under pressure, and because of this Adani saga. And as long as Adani group stocks not stabilizing, PSU banks are not going to stabilize. Adani Enterprise look particularly at the center of all the controversy. It fell from 3,000 to 1,000 in just 2 trading sessions, from 1,000 to 2,200 in 2 trading sessions, and from 2,200 it's slowly grinding every day 4%, 5% on a close to close basis. Sometimes intraday, fall 10%, then shoots up, and kind of things. For the last many days, I've been just joking, any day you short Adani Enterprise, the next day morning surely you will get profit. So that trend is continuing still. So I also have a lot of positions in Adani Enterprise. Just today and tomorrow, 2 days, I just want to exit all my positions and hope it doesn't fall much. But I always say, hope is the worst enemy in stock market. So PSU banks will be under pressure. Even the private sector banks will also be under pressure. IT stocks will be under pressure. And then, only Reliance and FMCG stocks will have to support the market, but do not know how much they will support. And if you are looking at negatives, the global cues and weakness in our market, but however, not everything is negative. There are some positives also. Number one, we have already fallen so much, we have already factored in this US fall to some extent. It may not be fully, but to some extent in the last 3 days. So therefore, we may not fall much. And second thing, FIAs. FIAs are still on the buy side. And net institutional selling is very, very little. It does not support the kind of the fall we are having. So then who is selling? Probably retail people. And number 3, assume that market participants are bullish and close their eyes and they sold a lot of put options. When there is a sudden fall, so those option sellers will be trapped and they'll be running for cover, propelling the market down further. But this time that is not the case. And anyway, the market participants, more or less, they were bearish and more calls were written and puts were not written. As I told you yesterday, selling 18,000 call, buying 17,750 PE. In fact, these people would be in profit if market falls. So therefore, there will be no panic on the downside. That's because most of the option writers are on the call side, not on the put side. So these are all some, I won't say positive, but not negative. So the downfall may not be much for us. And I will not be surprised even if there is some kind of a recovery intraday. Though US markets have fallen so much, the futures are slightly positive now. And one thing, the US markets going very bad ahead of the Fed minute. Somehow I feel that, Fed minute. So this is the minute from the last meeting. Up to that point of time, the things were not really that bad. So that is why the Fed chairman has gone for 25 basis point hike, not 50 basis point. So things started deteriorating, in fact, after that. So therefore, this Fed minutes may not reveal, a very bad picture. So who knows? Tonight there may be even some kind of a short covering in US markets as they are oversold in the extremely short term. So that may help us for tomorrow also. But however, looking at the open interest, I don't think that Nifty is going to expire above 18,000 for this series. And last series ended around 17,900. And by looking at the open interest, yesterday 17,900 call option has added huge open interest. So I think we must be happy as long as if it closes between 17,800 and 17,900 by tomorrow. So as far as the downside, 17,700 should act as a support, but we do not know. We still have 2 more days, today and tomorrow. So we will see whether the Reliance and FMCG stocks support the market, whereas the banking stocks are definitely going to add pressure to the market. So if there is any intraday recovery, many times, markets gap down open, it comes somewhere closer to yesterday's closing and then again falls. So if market come closer to yesterday's closing, I will be looking to sell 18,000 call option. The premium may not be much, but the safety wise, it is better. So overall, 17,700 to 18,000 is the tight range. And anyway, we have only 2 more trading sessions for this expiry. So that's it for now. Hope you enjoyed watching this video. Thank you for watching.